Today's microcap stock introduction might make me look like a crazy person, or it might make people a lot of money, or maybe both, and I look like a crazy person who made a lot of money. Because I've covered this stock before in a full-length video. That video is called Dumpster Diving for Hidden Gems. I will link to that down below in the pinned comment. And I concluded that video with a famous quote from Wayne Gretzky that I love applying to microcap stocks, which is, I skate to where the puck is going to be, not where it has been. Because what has happened historically with a microcap stock is important. It develops trends. It tells you what the company is about. But where a microcap stock is going to be in about a year is a lot more important. And today I'm going to quickly talk about where Sabio Holdings could be in a year. They do ad tech solutions for the future of streaming television. And from their investor deck, that has been working out pretty well for them, posting a compounded annual growth rate of 37% on the left and 86% on the right. They get 70% of their revenue from connected TV, and 78% of that revenue is from repeat customers with about a 90% retention rate. So all looking pretty good. What hasn't been good is their share price. Year to date down 10%, 1 year down 62%, 5 years down 85%. Do not forget this was a COVID SPAC, meaning the share price was artificially inflated for probably a long time. A lot of this is just share price coming down to normal valuation levels. But can it increase? Is the company improving? That is what I'm looking for. So to figure that out, I go back to this slide. Why does it have a left slide here that it's at a CAGR of 37% and a right slide that's at a CAGR of 86%? What's the difference? So for Sabio Holdings, they get a lot of their revenue and profit from political ad spending. They're trying to change that over the years, where they're trying to build a more diversified business that isn't so related to political spending. However, being such a small microcap, of course there's going to be fluctuations. So this slide on the right, the 86%, is on the political years, the years where there's elections or midterm elections. The slide on the left is where there's no political spending. This is the years where there's absolutely nothing. And you can see in 2023, even though this looks like a fantastic amount of growth from 2021, from 24 million to 35 million, it is down from their 2022. So what investors see is revenue going down from year to year, even though their non-political revenue is going up and their political revenue is going up. That's the difference. Now, before I get more into the numbers, do not forget that I'm not a financial advisor. I'm definitely not your financial advisor. Nothing that I do on this channel is financial advice. This is not how to invest. This is how I invest, and I could be wrong. Please go do all your own research. And this is the year with political ad spend. This is the year without political ad spend. You can see revenue and earnings going down. And even myself, understanding the difference between these two revenue cycles, it's still not easy to like a stock, to like a company, to hold on when your revenue is going up significantly and then all of a sudden it just drops. And where Sabio got some really poor timing is 2022 was a terrible year for microcap stocks. So in a market that was bad for microcaps, they had a good year. And then in 2023, a year that was pretty good for a lot of microcap stocks going up, they had a bad year. So talk about terrible timing, but we can literally visibly, quantitatively see their revenue cycle trending up again. Their 2023 upfront contracts was only 4.3 million, 2024 upfront contracts up to 10 million, 133% year over year growth in upfront contracts. And that's now been blown out of the water by $27 million US announced by Sabio Holdings, which is what, 36 million Canadian, give or take, with currency exchange. So the investing thesis here with Sabio Holdings is pretty simple, right? They had a good revenue upcycle year in 2022. They had a bad revenue downcycle year in 2023. We're heading into elections. Are they going to have a good 2024 year? Probably, right? The real question is what this company can do in 2025 and beyond. Are they growing that non-political ad spend? Are they improving the company? Can these upcycle years be more consistent? Can you hold a company that does still, as a microcap, get a little lumpy depending on when there's elections and when there isn't elections? Here's their investment summary. I'll let you decide for yourself. Thank you for watching Common Sense Investing. My name is Cameron. Really appreciate your time. Good luck finding the next great penny stock.